Hi there, good afternoon. You've tuned into ET now, and this is Market Phataphat with me, Cheryl D'Souza. Along with me, I have Ava Dubash as well as Vinny Motiwala. Very good afternoon to you as well, ladies. And subdued trading session once again. It looks like it's a repeat of yesterday's trading session itself. Markets are pretty muted right now. 0.2% downtick coming in for the benchmark indices. Even Nifty Bank as well is the one that is trading in similar fashion like of the benchmark indices in today's trading session. 0.5% downtick coming in for the Nifty Bank. Take a look at what the IT index is doing, because given the fact that you had HCL Tech earnings, you had signed earnings, but you have two downgrades coming on Tech Mahindra as well as Emphasis, and that's the reason why both of these counters are under pressure in today's trading session. And let's not lose sight of Reliance Industries. Big boy Reliance Industries will be reporting its Q4 earnings later today, as in really later today. So definitely a long day coming for us, ladies.
Absolutely. On that note, let's get started with all the stocks that are buzzing in trade, either on the back of news flows or technicals. On the technicals, we have Kunal Bothra with us, while from the research team, we have Harsh as well as Ashesha. A very good afternoon to all three of y'all. And I'm going to start with that IT pack that you were talking about. Two of these stocks which are not doing well, and actually that's Tech Mahindra and Emphasis, because there's a note that has come in from JP Morgan, where they are highlighting and they expect to see some weakness in these two stocks, especially, and weakness in the BFSI segment, telecom, high-tech and manufacturing segment. Now, what JP Morgan says is they've cut their FY24 and 25 expected revenues by 6% and 8%, and margins by 40 basis point and 60 basis point, and which is driving an EPS cut of 8 to 9% for Emphasis. And even in Tech Mahindra, they have cut their revenues by 3 to 5% for FY24, FY25. As well as margins by 40 and 60 basis points respectively, driving an EPS cut of around 7 to 10% as well. So yes, JP Morgan has downgraded Tech Mahindra to underweight from a previous neutral rating. They've cut the target price to 900 rupees per share from previous 1000 rupees per share as well. And Emphasis, they've downgraded to underweight as well and given a new target price of 1550 rupees. Previous target price was 1800 rupees. So yeah, JP Morgan is not quite happy with Emphasis and Tech Mahindra. They were giving a thumbs down to both these stocks.
And that's the reason why both of these stocks are sulking in today's trading session. But moving on, let's talk about PNB Housing Finance. And this particular counter is seeing a mild uptick in today's trading session. Last time I checked, the stock was trading higher by as much as about 3%. And the reason why this particular counter was gaining in trade, because Nippon India Mutual Fund has bought about 0.3% stake in the company. So as per the data, Nippon India bought about 5 lakh shares in bulk deal on Thursday at a price of 133 rupees per share. On the back of that, you can see that spike coming in the counter. No doubt right now it has given up some of those gains, nevertheless holding on to gains of about 1.6%. And if these gains hold, then the stock is on track for a fourth consecutive trading session. So that is PNB Housing Finance for you. That stock, as you can see on your screen, is trading higher by about 1.6%. Like I mentioned as well, the stock was trading higher by about 3% earlier on.
All right. Let's get a move on then and put the spotlight on Reliance Industries as well, as the street will closely be eyeing those numbers. And
let's not forget, actually, the street is eyeing those numbers, and the numbers are only going to come post-market hours way into the evening, isn't it?
We have a long wait.
We have a long wait coming in for Reliance Industries, given the fact that the stock will be reporting its numbers at 7 o'clock or so.
Absolutely. It's a long wait. As always, we brace ourselves for Reliance Industries, which with their numbers post-market hours. Now, let's focus in on what the street is penciling in. You've got revenues which are seen at higher by about 2% this time around. So we're expecting it at about 2.2 lakh crores. EBITDA is seen coming in higher by about 4% and margins at 16.6%. The net profit is seen at about 16,759 crores for the quarter gone by. That's up about 6%. Of course, a lot of their individual segments will be eyed closely. For example, retail revenue is seen up 3%. EBITDA is seen coming in higher. The O2C segment EBITDA is seen up 9% to 15,200 crores. And the oil and gas exploration EBITDA is seen up about 4%. We're watching out for steady refining and improved petchem margins. E&P growth is likely to be aided by higher store additions, by higher growth in volumes. And we will be watching out for Reliance Jio as well, as the revenues are seen higher by about 1.7%. ARPUs at about 179. Lots factors and monitorables for RIL, but of course the street will react come Monday.
Absolutely. Let's move on to the next one. And Samvardhana Motherson, Kunal, that's the first stock that you've picked up for us today on the technicals. How are you looking at the charts for this one? Because for the longest period of time, when you look at it, it's not done much. Finally, seems like it picked up pace in the last 6 months. What are your target price?
It's our closer to 76, 78 for Samvardhana Motherson. But the last 1 month, the recovery is very interesting for the stock. From 62 rupees, the stock has come back towards 70 odd mark. The major gap resistance for the stock is around the 76 mark for Samvardhana Motherson. So my belief is that possibly in this leg of price uptrend for the stock, it could head back towards a retest of this major gap. Now, the other part to look at for the stock is how the auto anch stocks have behaved in the last 1 to 2 months. In fact, most of the auto anch stocks have actually managed to outperform the traditional large cap auto stocks in the last 1 to 2 months, and that itself could probably be an indication that the institutional flow as well as the action is shifting towards the auto anch space. That's where I believe Motherson Sumi or Samvardhana Motherson stands out to be an interesting chart, heading towards a breakout, possible targets over the near term closer to 76, 77.
All right, so that is Motherson Sumi, or rather Samvardhana Motherson for you now. But Ashesha, moving on, and we will stay with the auto pack, looks like it. Escorts and Mahindra, why are both of these counters in focus?
Both of these tractor counters are in focus today, and that is because Nuvama conducted some channel checks, and on the basis of that they say that the tractor industry is expected to grow at a moderate 5% in FY24 versus a growth rate of 12% that we saw in FY23. This is due to concerns of El Nino leading to below normal monsoon. As far as first quarter FY24 is concerned, over here they say volume growth is expected to be robust at about 18 to 24%, and that is because this is before El Nino effect in. As far as their rating is concerned, they are maintaining their buy rating on M&M. They've given a target price of 1430 rupees per share. On Escorts as well, they've maintained their buy rating with a target price of 2420 rupees per share. They've also spoken about market share gains, where they believe that Escorts is likely to gain market share over the next 3 to 5 years period with the help of Kubota support. So on the back of this note that has come in, both of these counters are in focus today, but in line with the broader markets, the stocks are declining in trade as we speak.
Okay, there you have it. That's word coming in on the tractor majors. But let's move on then, right back to IT. It seems to be dominating the show today. And HCL Technologies, how is the street reacting, Harsh, to the numbers? What do brokerages have to say? And what's been the verdict?
Yes, Avan, so we're looking at, let me first take you through the numbers. First off, revenue was absolutely flat when I'm looking at it sequentially at around 26,600 crore. We're looking at EBIT of around 48.6 crore, which is down 7.5% on a sequential basis. And EBIT margins have come in at around 18.1%. Now, the FY24 projection also, or rather guidance also from the company is at 18 to 19%. And they are targeting a CC revenue growth of around 6 to 8%. Profitability, well, PAT is actually down around 3% on a sequential basis with a dividend distribution of around 48 bucks for the entire year, which translates to around a 4.5% dividend yield to current market prices. In terms of the dollar revenue itself, it's down around 1.2%. Largely the street, in terms of analysts, largely believe that it's a very soft result from HCL Tech, but it's still pretty much in line with expectations. And you can see the stock absolutely doing nothing much, up around 2/3% as we speak.
All right, so that is HCL Tech review for you. But let's hear out what the management had to say ahead for the company. Here are Mr. C. Vijay Kumar, who is the CEO and MD at HCL Tech.
If you look at some of the other verticals which I had called out, tech and telecom, there has been definitely some pullback and reduction in the spend on the services side with some of the big clients there. It's primarily driven by the inflation and other kind of priorities that's kind of impacting them at this point of time. And we believe some of that is behind us in some accounts, and some other clients we still have some more reductions expected. All of this is baked into what the overall outlook for the year is. I did call out in the earlier conversations that the booking in Europe has been a little soft, even the pipeline has been soft. So that's what is playing out in revenue. But if you take on a year-on-year basis, Europe delivered almost 20% currency growth. So it's really the flow of deals and how they translate to revenue. That's what is driving. Overall, we look at all the geographies to be quite strong in the opportunity landscape. Our pipeline is good. In Europe, conversion times may take a little longer, but we do believe midterm prospects of Europe remains very bright. And we have very, very little negligible exposure to smaller regional banks. And based on all the work that we have been doing with our clients, I think financial services will be our strongest growth vertical in this year.
All right, that's HCL Tech. Number 7 then, we're discussing the charts of DLF. And Kunal, it's a stock that you've been bullish on for quite some time. It has seen quite a strong accelerated move over the last 1 month. So from the 406 levels, is it going to build onto gains?
DLF is one of the major reasons why the entire real estate sector has actually done exceptionally well in the last many weeks of this price uptrend. But in the last 1 or 2 days, DLF has actually gone back into an overbought territory. I think at 420 odd levels, the stock was hugely overbought. Most of these indicators had come back towards a much higher of an extreme zone for the stock price, and some sort of a correction or cool off was warranted for the stock price. We've seen that correction happening for DLF in the last 3 trading sessions. The stock has corrected by more than 4% to 5% on an average. I believe maybe another couple of percentage points correction could be in line for the stock price. 390 to 395 could be a classic zone in case if the stock happens to correct to that level. I think that should be a zone where traders could look at a contra buy. The structure for the entire real estate pack as well as DLF is extremely bullish. So traders should try and use these corrections or dips as an averaging opportunity.
Keep an eye out on those levels, and you can use it as those levels as an averaging opportunity for traders. But let's move on and talk about Nykaa. Now, Morgan Stanley has come out with a note on Nykaa where they're maintaining an overweight rating, but they've cut the target price for Nykaa. They've cut the target price to 188 rupees from previously 206 rupees. Now, they see weakness coming in the fashion business for the company. The fashion business will break even at EBITDA levels in FY26 versus FY25 previously is what they're highlighting. As well as they've also cut their FY23 to FY27 revenue estimate by 1 to 3% and the EBITDA forecast by 1 to 5%. Earnings estimate by 3 to 6% as well. So yes, they are cutting their target price. They're not too bullish on the fashion business and they expect to see weakness there. So because of that, overweight rating is there, but the cut in the target price is keeping Nykaa a bit on the lower side and down 1.5%.
All right, let's talk about another stock that was actually sulking in trade, and that is Laxmi Organics. If you look at that particular counter on an intraday basis, it posted the worst percentage drop in about 3 weeks. Now the stock is down about 3.5% as we speak. The decline has come in after the company approved the proposal to raise funds via debt or equity. They are seeking to borrow about 2,000 crore rupees. So on back of that news, you can see the stock that is under pressure, 3.5% downtick coming in for Laxmi Organics, the biggest intraday drop for the stock in about 3 weeks.
Okay, that's the newsmaker today, but let's find out what else is on the brokerage radar. And Tata Consumer makes it to the list. Nuvama actually has come out with their latest note on the stock where they say that it's a buy rating with a target price at 865. They believe that the concerns around the dip in India's tea volumes are being addressed and we are likely to see a complete rebound in the tea volumes. International margins also, Nuvama says, for Tata Consumer will improve in FY24. The view of calling off the expensive distillery acquisition, according to Nuvama, is a blessing in disguise. They expect the salt business, Nourishco, Soulful, etc., all the brands are likely to retain strong momentum. Target price at 865, and you've got Nuvama giving the stock a thumbs up. But despite that and the initial reaction, the stock has tempered off and now just about holding on to the 700 mark.
Let's move on and talk about TVs Motors on the charts, Kunal. This one has seen a correction in the last couple of months as well. Is it the right time to pick this stock, or would you still stay away and we could expect a bit more correction?
Classical chart, Vinny, because till last 1 week, the stock was going through a very strong rally from 1050 levels to almost 1180 at one point of time in a matter of just, I think, few trading sessions, which means a jump of more than 13%, 14% for TVs Motors. What you're seeing right now in the last 2-3 days is mild correction where the stock has come back towards a possible 50% to 61% retracement support. I think at current levels, the way the indicators are shaping up, the way the price action is moved, the stock has come back towards a major support point for itself. So for short-term traders, this could be a classical zone to go for a contra buy on TVs Motors. My expectation is that whenever the stock resumes its rally, say in the next couple of days, it could probably head back towards 1150 marks. The risk reward is extremely attractive over here for TVs Motors, and traders could look to initiate fresh longs over here.
All right, that is the take coming in on TVS Motor. But Shesha, let's talk about Jubilant FoodWorks. Why is this one in focus?
Well, yes, UBS has upgraded the stock to a buy rating from their earlier target price of neutral rating. They've kept the target price unchanged at about 600 rupees per share. The stock currently trades at 440 odd levels, so UBS sees a nearly 35 to 40% upside from the current market price. They say that the stock has corrected nearly 30% in the last 1 year, and now the risk-reward proposition is pretty favorable. Long-term growth potential of the company remains intact, and they also believe that new brands will now support growth for the company. Near-term pain in demand and margins, however, they expect to continue. Now they've upgraded the stock to a buy, and they've given a target price of 600 rupees per share. On the back of this note that has come in from UBS, the stock is gaining in trade today, nearly 0.9% higher in trade for Jubilant FoodWorks.
Okay, watch out for that stock. But meantime, let's take it right back to no surprises for guessing IT. And Harsh, discuss Cyient.
Well, yes, so solid set of numbers, in fact, from Cyient in what seems to be quite a tough quarter for IT. We've seen Cyient do particularly well in terms of their numbers. 8% growth in terms of revenue on a sequential basis, a solid number there. Even EBIT expanded around 17% sequentially. So EBIT, in fact, incrementally has been beneficial with regard to the numbers. PAT has in fact gone up 4.5% on a sequential basis, and margins have improved from 13.2% to 14.2% in terms of EBIT, again sequential. What we're looking at is that going forward, they've given a consolidated services revenue growth guidance of 15 to 20%. They continue to expect double growth going forward as well. That's a positive. And they believe that margins will improve by 100 to 200 basis points going forward as well. So a couple of positives coming through even in terms of the commentary. Again, in terms of dollar revenue, it's come in at 213 million, where analyst expectations were around 1% or so lower than that, which is also a solid growth nonetheless. So across the bat, it seems like a good set of numbers. The stock is also up 7% in trade.
220.
Okay, that is Cyient, that's the review. But let's go across and listen into Karthik Natarajan, the ED and CEO of Cyient, what they had to say on their roadmap ahead. What is the growth that they're expecting as well?
Bringing a lot of factors over the last couple of years in terms of operational efficiencies in the form of utilization, pyramid correction, and also ability to improve on our price hikes and automation. And all this combined effect helped us to improve the margin in Q4. I think we have talked about the order intake for the last 3-4 quarters. We always consider a year-on-year number would be a right number to compare. So if you compare Q4 of fiscal 22 versus Q4 of fiscal 23, we have shown a 19% growth in constant currency. And for the full year of fiscal 23, we have shown our order intake growing by 18.5%. So that is kind of an early indicator for us. And we also have seen a growth of 10 million plus, 20 million plus accounts on an annualized basis, which shows the kind of mining efforts that has been helping us to really move the blocks from 2 to 5 million to 5 to 10 million to 10 million plus customer accounts. And also combined with large deals. And we have shown about 418 million large deals for the full year. I think these are the early indicators that I would really take a view when we really started looking at our guidance of 20% year-on-year services growth. Now, we have already filed for DRHP, so we are on a quiet period now, so we won't be able to give any forward-looking statement on DLM. And we are hopeful that sometime this quarter the IPO should happen.
All right, so that's the management of Cyient on ET now. But let's move on and let's talk about Torrent Pharma, Kunal. And just like with the rest of the pharma pack, which is seeing a bounce back, even Torrent Pharma has fared pretty well. Where do you see it headed from here on?
Yeah, it's a very slow, gradual recovery for Torrent Pharma in the last, I think, 3 months or so, the stock has recovered from 1450 to 1600. So again, looking at the way most of these pharma stocks have rallied, this seems to be more of a slow, gradual move for Torrent Pharma. The interesting bit is that the stock has come back towards a 2-month high for itself. So, breaking past about the 1600 levels today. Volumes in the last 4 or 5 days have been quite interesting for Torrent Pharma, where on days when the price action has been quite positive, you've actually seen volumes jumping up for the stock price, and on days when the volumes, or rather the prices, have been subdued, volumes have dipped down for the stock price. That's an indication that traders are more encouragingly participating on the upside rather than on the downside. So it looks to be an interesting chart, and I believe that this slow gradual uptrend is here to sustain as well as continue for the stock.
Okay, that is Torrent Pharma for y'all. But let's move on and talk about Navin Fluorine. Now, this stock is in focus. Why? There was a plant visit which happened a couple of days, yesterday, I believe, and analysts have come out with some of the key takeaways that have come in over there. One, what they've highlighted in terms of the fire safety norms, those are the best, and they said that they have, analysts are highlighting there's an elaborate investment that is made here as well, large water farms, water reservoirs, as well as a planned sewage to avoid the flushing as well. So that is a positive coming in there. Then they're also highlighting in terms of great aesthetics and in terms of OHS cafeteria. The ETP entirely is built above the ground levels to avoid soil contamination, as well as probably the first of a kind in the Dahej as well. The quality of the plant looked quite superior, probably as it is new, but still appeared to be better, is what the analysts are highlighting. Even the plant layout planning factored near-term requirements with which helps in avoiding haphazard growth, as well as improvement in the capex efficiency as well. Stock just up with mild gains of almost 0.9%.
All right, moving on, let's talk about Sterling and Wilson, and this one is reacting to its earnings because the losses have widened in the quarter gone by. And on back of that, the stock had fallen approximately 9% the last time I checked. Now it has recovered a tad bit, but still sulking in trade. 5.6% downtick coming in on for that particular counter. The revenue from ops has fallen by about 91.7% on a year-on-year basis due to the rising costs and lower contributions from ongoing international EPC projects. If you see the stock, it's seen its biggest intraday drop since February 24, 2022, and it's also trading below its 50, 100 as well as 200 daily exponential moving averages, and it's hit a lowest level since February 3rd. So as you can see, earnings reaction negative for Sterling and Wilson.
Reeling under pressure on the back of that. But moving right on then, at number 17, we've got Aavas Finance here. Citi is pretty bullish on this stock. In fact, they've come out with their latest note saying that it's a buy rating that they've maintained on the stock. They've got a target price at close to 27.10 on Aavas Financiers. Remember, recently the managing director as well sold close to a 1.8% stake in the March quarter. Now, Citi believes that this sell down could temporarily weigh on the stock. There were apprehensions about the MD and CEO split that could persist a little bit longer than were initially thought. But they have flagged off some concerns, saying that despite intact fundamentals, the stock has significantly underperformed over the last 6 months. They still do maintain a buy stance, and as I said, target price 27.10 on Aavas Financiers.
Let's move on and talk about BPCL on the charts. Kunal, how are you looking at this one? What are the targets, levels? Is it the right time to buy this one?
Companies in the last 3-4 days are going through a very interesting data, at least in terms of the volumes, because over the last 2 or 3 days, for example, oil marketing companies are seeing mixed set of data in terms of open interest. I was looking at the charts for in fact the data for HPCL. That stock apparently has BPCL. That stock has actually seen a reduction in the open interest in the last many days. Yesterday was one of the day where the data was a bit more different than the prior few more days for itself, where the stock had seen a mild jump in the open interest. But prior to that, there's been reduction in the stock price open interest, and that was an indication that maybe traders are now starting to reverse the price action, or have a reverse view on the price action. The stock in the last 2-3 days has seen mild pickup, specifically today, which I believe could be interesting day of events for BPCL, where you might see the stock seeing some built up in the open interest back again. So on the back of OI, I think BPCL and the chart patterns for many of these OMCs are looking quite attractive.
As a take coming in on BPCL, but on that note, we slip into a break on this edition of Market Phataphat. More on the other side, don't go anywhere.